Good morning, good day, welcome, bienvenue, wherever you are. Welcome to our international webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side that will be answered on our webinar. Our goal is quick and smart, so let's have a nice start like every business day to the same time. And we will start with our disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there and all other what you like to see and to watch. Also, for example, our key information documents, the kits. If you'd like to read it, just visit our web pages. There you will find also some information about the differences between retail clients and professional clients. Since August 2018 in the European Union, there's a difference. Retail clients will get a maximum leverage up to 30. Professional clients, if they are eligible, can still get via an application and higher leverage up to 500. All details about that and how to apply also available on all our web pages like admiralmarkets.com. Like said, ESMA regulation in the European Union, one of the hot topics of the year. A picture shows more than 1,000 words. If you traded the DAX 30 or the euro dollar before this regulation, the margin requirement was quite low. For example, 24 euro or 200 euro, and now you see it new 600 euro or 3,333. But like said, if you're a professional client, you can apply for that and you will still have the access to a higher leverage. Retail clients will have an unlimited protection against negative balances. A professional client will have additional protection up to 50,000 British pounds via our negative balance protection policy. 50,000 British pounds is around about 70,000 euro. This is me. My name is Jens. My English made in Germany, so I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And like today, on Friday, it's Dirk's day, our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 CFD or euro dollar typical spread of just 0.8 points or pips during the main trading hours without any additional commission. Check all that out on admiralmarkets.com. There you will find also our contact details. You can call us, you can send us email or our regulatory background. Of course, everything written down on our web pages. Enough from my side. Now it's time for our day trader of today. Good morning, good day, Dirk. What's your view to the markets today?
Yeah, good morning, Jens. Good morning, guys. Hopefully everything is clear, like the sound is clear and the picture you can see everything. And already placed an order this morning here at the German DAX, as you can see, with 2 labels here on the screen, just in the middle of it. Right now, it's maybe a little screen for you guys, but I will soon widen that one. Before we're getting started, we maybe have a look on a couple of let's say prepared pivots and numbers. I'm just prepared for you guys. Have a look at the XeroDAX pivot points. For example, start with the resistances and the pivot points and the support lines. As you can see right now here, we are just hovering around the pivot point of 12,377. And these are the daily pivot points, by the way. And this morning we already tested the resistance 1 and resistance 2 level. If I move that kind of board a little bit to the right side, you can see that we already had a high at 12,446.22 this morning. And as you can see, there's hovering around and hovering to the downside possibly. Maybe it's collecting support 1 as well. In that case, this kind of a trade of the 20 points stop loss would be killed. Okay, looking more to the downside, there's a support 2 at 12,319. A couple of interesting averages, moving averages. Looking at the simple moving average here, for example, as SMA 50, 100, and 200. These are the numbers from 1048 CET. So that's where they are taken from that kind of 1048 CET today, this morning. As well, the EMA 100 and EMA 200, as you can see, 572, 577 to the upside. More important, just have a look at the so-called open gaps. To the downside, we still have a gap open from 12.011. This one is from 4th of April and to 12.135.64. This one is from the next day. So this gap is still open. If you will have a look at the charts later on, you might scratch your heads. Sometimes when you look for gaps, I'm talking about the XEDRA-DAX gaps. That's maybe the reason a couple of those gaps sometimes I'm showing are not visible for you. Depends where you look it up. So upside, still a gap open from 13.010.54. That's the one of 15th of June. Of course, you're going to see that the other way around usually. That was typically a German mistake. Doing the date the other way around. So this one is open to 12.982.92. So these two gaps are still hanging around somewhere. Just to let you guys know, we'll close that board right now and just have a look at the daily chart. Closing that one here as well, and just have a look at the DAX chart. On a daily basis. If you just check out some levels to go, what is the reason right now? So you might find a couple of Fibonacci retracements from the last high to the last low. Just checking out these levels as usually, and you will find a couple of those horizontal lines here. 61.8 level here, for example, still hanging around at 12.785 level. So the levels we were talking last week, let's just check that one, is still valid. So if you see this kind of a pink line down descending trend line here, that's where I talked about where the possible DAX move to the upside could possibly end. I tried to mark that with a little bit of a shape here, which is something like the zone where we might go to the upside, and will be a nice swing short to the downside as well. Not only from the day trading or intraday trading versions, but on top of that, may be interesting as well for a couple of days, 2 or 3 days or more. Looking to these 2 or 3 levels, and of course, on top of that, looking at this 61.8 trend line here as well, which is at 12.275. This is the way to the downside, where it possibly could take a reverse to the upside as well. Again, this has nothing to do with our intraday short setup, intraday setup for a long. This long started, as you can see, at 12.374.93, and the stop loss scenario is at 12.354.93. So that means 20 pips stop loss level is not much, but it's well enough to be killed on the one side, and well enough to move the stop loss as fast as possible if we are going up a couple of 10, 20 or 30 points the other side as well. Okay, I'm leaving that kind of a DAX board here, and just to let you guys know a couple of things which possibly interfere with the DAX as well with the rest of the markets. The so-called trade conflict is still out there. It's not gone. It's still getting more fire. And as you may read the headlines yesterday, you find out that the Trump administration implemented another round of tariffs against China. And if you just check that out, I will just do that on the other screen here at my other personal computer here, and just check that out. It has been affected with 279 new goods from China. So what I'm talking about right now is what has a trade conflict to do with maybe the US dollar rate, and maybe with the US dollar rate to come, and with the interest rates in the US. Well, a lot. So imagine just what will happen to a couple of products and a couple of, let's say, products every John on Main Street is buying. We are talking about apparels. We are talking about stuff like maybe footwear. We are talking about clothes. We are talking about everyday goods. So these goods are going to be more expensive because a couple, or not a couple, or even a major part of these goods are coming from China. They are produced in China. Check out your, for example, your footwear, your Nikes or your Adidas or whatever you're wearing. Check out your clothes, where they're coming from. Mostly from Asia, mostly from China. And if there are tariffs going to be put on top of that, all these kind of goods are going to be more expensive, between 10, 20, 30 or 40% or more. It depends what kind of product it is, of course, but it's going to be going to get more expensive. So what has it to do with the interest rate? Of course, this is something like the interest rate will go up because the CPI, core price inflation, will go up. So all this stuff has to do something like we say with a so-called boomerang. So if you place tariffs, they will be having effect on you in a couple of months and maybe 6 months later on, and you will definitely realize it in your personal wallet. Okay, if you look at the interest rates, if you look at the coming interest rates, for example, from the Fed, so the most important central bank of the world, you will be seeing that the Fed is going to be hiking in September. This one is pretty sure with 98% probability. And if you take a look at the rest of the year, it's not much until the end of the year. You will be having only November and December FOMC meetings. So the next target rate possibly could be hiked as well in December. If that happens, we are hovering around between 225 and 250 at the federal funds rate, and we are going up more. So that means the inflation, excuse me, not the inflation. That means that the federal target rate will be going up in direction to the roof. If you compare that to the Eurozone, if you compare that to other countries and other currencies, it's quite clear that a lot of money tries to seek not only the safe haven, but tries to seek the currency where they get a lot of interest rate, and that will be still the US. Let's check out this market watch here again and check out a couple of other goods. What has it to do with a couple of other goods as well? Check out this Chinese yuan. Where is it? I'm not sure if I will find that immediately. Jens, if you just see it, you just give me a shout out. No, I'm not sure if it's in here. There you go. Okay, chart window from the Chinese yuan, and I'm going to check that out on a daily basis and have a look where it comes from. We are hovering around this 620s marker here, around March, the end of March, and now we are going into June. There's the next little bit of hovering from sideways. So this is something like, let's check out what kind of level is that one. It's 638. So just remember that in the middle of the June 638. And we are going up until 15th of August, so exactly in the middle of August. Not only Mr. Trump, but a couple of guys trading currencies and trading, even trading currencies like the US dollar versus the Chinese yuan. We are talking about the offshore yuan. They realized that this kind of move is quite interesting because the trade war stuff occurred around right here. And it's quite interesting that they manipulated their own currency, of course, for taking profit themselves, just to reduce the impacts of the tariffs of 10 or 15%. It's quite easy to do that with a devaluation of your own currency. Of course, it will lead to other problems as well, but first it will help a little bit. It's something like little bit easier to combat with other currencies like the US dollar. So now have a look at the gold, and you will be seeing the same moves, of course, to the other side here. You check out these levels from June. We are around 1305, and we are going down exactly to the 15 and 16th of August, where gold took the latest to the downside here, with a year low of 1160. That's exactly the same point, nearly the same point like the US dollar versus the Chinese yuan made the high. A lot of big so-called big ask from the ask side of gold came from China the last couple of months and last 1 or 2 years. China was a big buyer of gold, and now that stuff turned around, of course, because it got more expensive to buy gold when the currency has something like a devaluation. So only from that side. What is going on with gold right now? If you just have a look at the, let's say at the short chart side here, the 4-hour chart and the pivots, you will be having this support 1180, which is the next step to a reverse long, of course. And the next scenario for the upside is still our blue box here, which we drew last week and a couple of weeks ago. Still that scenery at this 50% level of the bigger impact. All right. Whatever my iPhone is talking with me, I didn't do anything. That's very interesting. All right, let's not disturb from that one. Let's go to most important stuff we were talking about last week. First of all, Tesla. This deal is almost done. We spoke about these huge gaps. This gap this gap close has been reached. So better taking profit when a gap like this is absolutely closed. You see, it's always important to just close that one, close a trade like this, because you see you will be losing again if you just don't close it. Okay, that one was just for showing you that those kind of gap trading somehow worked well. And from last Friday on top, just we were talking about the single stock from the German DAX, which took a really ride to the downside. We spoke about a reverse long scenario, and we spoke about having a long scenario around this level around here. So I told you last Friday that it might be something like a little bit of $3 or $4 or $5 to the upside. In the end, it went up to $5 to $6 to the upside. So if you were not taking that winner out right now, you probably lose everything again with the next wave to the downside, if that happens. Of course, you might be closing this gap as well. But of course, you could be working with a strategy that you just sell the half of the position and just place the stop loss to the entry or a little bit above that, and go, if you like, try to go to the upside with the rest of the trade. All right. Now we're going to the euro-US dollar. This note this morning, it was yesterday, the evening, late evening, I called out euro-US dollar long, reverse long. I started that one at 115.40 and took the half of it out at 115.70s. You can read that at my Twitter feed, if it's Dirk, if you like. The half of it is still in. The stop loss is 115.40, so the so-called stop loss is already moved to the entry level. Why did I place a trade like that? Just go to the 4-hour chart. We just will be closing that DAX scenario here, and have a look at the Fibonacci's here from the 4-hour from this so-called low. This low is 113.01, so that's on top of that. It's the year low. It's a new year low of 2018. And just check out if that is correct. That is the top of 116.19.8 and this is the top of 116.22. Yeah, that's correct. Just widen that picture here for you guys that just you're going to see more. And insert a horizontal line here as well for the 23.6. Fibonacci. That's the only reason. It's nothing like Merlin's glass balls. It's nothing like a special indicator or something like a miracle somewhere, or some guys are shouting out to me, go long here and sell here. No, it's just trading that kind of a Fibonacci retracement. First, possibly it could go wrong, of course, but when you don't try it and you don't get in, you won't be finding out if it's working. And right now it worked. The half of the position is already taken out, as I said before, and the rest of it is at the stop loss level of 115.40. So might be getting stopped out. Okay, so what? You won't lose. You won't be losing anything. The next trade scenario is a reverse scenario from the 61.8 level, which is well underneath that, here around 114.30s. I won't be getting long before it's getting touched down there, and I won't be getting long if you're not going to break up the scenario. This could be something like a breakout scenario here as well. If we just go about this old low here, old high here around the 116.22. So this is something very interesting on top. Look at the indicators, look at the relative strength index, check out the levels right now. If you're going to check that out from the daily perspective, we had that kind of a new year low, and we have been at the oversold territories here at the relative strength index well under the level of 30, and this is something where you can go long. Look at the weeklies. Even at the weeklies, we were pretty much to the level of being oversold. Not really scratched 30 level, but a little bit like it. And it would be it won't be surprising. It won't be surprising if the euro can take a little bit of a breath to the upside as well, because a lot of guys out there, media, wherever you read, the euro is getting hammered. The euro is getting almost written down to hell, and this is always something like a sentiment indicator that it could be the other way around. So, just saying. Okay, and is there something clients are wishing for a special market?
Not today, and the time is our limit every day to the same time. So for today, I can tell you tomorrow is another day, but tomorrow is a weekend. So have a nice weekend already to this time. And the next webinar, Real-Time Daily Trading Ideas, on Monday to the same time like today with our day trader, Jay Mero. Thanks to Dirk. If you'd like to see and watch that again, a couple of hours later, it will be available on our YouTube channel. So just go to youtube.com/AdmiralMarketsFX, and here you can see and share as often like you want. Greetings from Berlin office from Admiral Markets. Thanks again and have a good day. Bye-bye.
Bye-bye.